How's it going, you guys? Christian Barrow here with Barrow Consulting and Wealth Management. Today I want to discuss with you guys a term policy and some of the features and benefits that might come with a policy like this. So certain companies and agencies, they have different philosophies. Some believe in just selling a term policy. Some believe in just selling a permanent policy. So today we're going to be discussing the advantages and disadvantages of the term policy. And just so you guys can make a more educated decision, if it's a type of policy that you might be looking for, you can make a more educated decision, and simply so you can just understand it in more detail. So when do you buy a term policy, or when do you buy this type of policy, and for what reasons, right? So when we are younger, we have very high, and we have a lot of liabilities, right? We have a lot of liabilities, however, we have limited assets. Okay, for now, as we're young, as we're building, we have high liabilities, a lot of liabilities, and we have limited assets. That's just for now. But you may be in a position where maybe you just purchased a 30-year home mortgage loan, right? You may have just got married. Maybe you just had a child. So the policy is designed to cover a need for a certain time. That's a reason that you would buy this policy, a need or a liability, right? So it's cover a need for a certain amount of time. So maybe what are some of the disadvantages and what are some of the advantages of a policy like this, right? So what I like to finish on a positive note. So what I'm going to cover first are some of the disadvantages of a policy like this. So what might one of the disadvantages be? One of the disadvantages of a term policy is the fact that it expires. So this type of policy is designed, like I mentioned earlier, to cover you for a certain amount of time. That may be 10 years, that may be 20 years, that may be 30 years, right? So it's designed to cover you for a certain amount of time. And however, the policy does expire after that time, right? So because it expires, and you might need to renew a policy like this by the time you are older, you might have, possibly you might have some health issues at this point. You are older, so there's less time that you'll be alive. So therefore, the cost of insurance is going to be higher. So one of the disadvantages would be that it's costly to renew. Okay? It's costly to renew a policy like this. Okay? Another disadvantage is the fact that there is no cash value in a policy like this. You might not know what that is right now, but I'm going to be covering in another video cash value and how that applies to a permanent life insurance policy. But another disadvantage is that there is no cash value. Okay? What might some of the advantages of a policy like this be? Okay? So one advantage is the fact that it's very affordable. Very affordable type of policy. If you're looking to get some coverage, you need to cover something for a certain amount of time. You want to cover your family, things like that. It's a very affordable policy. This might be the policy for you as you are building and increasing your assets. This might be the policy for you. Another advantage to a policy like this is it is exactly what it's for, is to cover needs, right? So it does exactly that. If you purchased a 30-year home mortgage loan, you might want to purchase a 30-year term policy to cover that liability, right? So one of the advantages is it covers needs, whatever that need might be, and everyone's in a different financial situation. Maybe you want to income replacement, your mortgage, you want to cover your family for a certain amount of time. It does exactly that. It covers your need, and it's very affordable. So what I would do is I would talk to a licensed professional, an agent that you might have. Everyone's in a different financial situation. This may be the policy for you, but go ahead and go out there and talk to a professional to see if this is the type of policy for you.